And the program does basically bail the banks out without taking a vote in Congress, because they're allowed to go take their bonds, and without giving any collateral like they normally would have to, they can sell them to the Federal Reserve, like I said, without collateral and without mark-to-market. They can sell them for the maturity price. So that is not good. And the Fed doesn't have the money, guys. The Fed is in the same shape that the banks are in.
All right, let's collapse.
All
right, Bitcoin, scam it to $1 while this is happening so that everybody can load up and you can become trillionaires. Thank you.
Don't do that, because then I owe Drew a bunch of Broncos. Anyway.
Okay, here we are, Sunday afternoon. It's about 3 o'clock. 3 o'clock Sunday afternoon, California time. 3:19, and we're looking at Dogecoin here. Dogecoin on the daily. There it is on the live chart, and it's at famous forever.
It's an interesting time to be a trader, man.
0.075.
I was just thinking that.
0.075.
Anybody who started trading this year, God bless y'all. Y'all got thrown in the fucking deep end.
Got thrown in the washing machine.
Oh, BlackRock just tweeted, the BlackRock Investment Institute calls out 3 clear takeaways for portfolios as financial cracks from the most rapid hiking cycle since the early 1980s start to emerge. Read our market commentary. Financial cracks show what to do now. Let's see if they mention the word Bitcoin and what to do now. The U.S. and European bank tumult is the latest sign rapid rate hikes are causing financial cracks, reinforcing our recession view. We expect central banks to keep hiking to fight higher inflation, not come to the rescue. We stay risk off, underweight developed market stocks and trim credit to neutral. But we are ready to seize opportunities as macro damage gets priced in. We overweight very short-term government paper for income and prefer emerging markets. Market price. So this is actually very interesting. Banking troubles on both sides of the Atlantic were rolling markets last week. That's the latest fallout from the most rapid rate hikes since the early 1980s. We have argued that bringing inflation down would be costly, creating economic damage and cracks in the financial system. This week's events will crimp bank lending, reinforcing our recession view. As the cracks emerged, market expectations for peak rates plummeted, as the pink line in the chart shows. The reason hopes that central banks will come to a rescue and cut rates as they did in the past. That's the old playbook though, and it no longer works. Central banks are set to keep fighting stubbornly high inflation and use other tools to safeguard financial stability. Case in point,
100%.
The European Central Bank raised rates by 0.5% last week, and we see the Fed raising rates this week. Our conclusion, investors need a new investment playbook and to stay nimble in this new market. And these guys have trillions of dollars in assets, by the way, and they're...
I like that word.
Yeah.
Nimble.
Yeah.
Yeah.
Stay nimble.
I'll put it in a news channel.
One thing I can tell you I love is you're watching central banks fucking scramble while crypto pumps, and that shit just makes me smile.
No. We're about to get fucked, you block.
I know. Just gotta enjoy the small victories while they're here. This is the first shot across the bow. They're not gonna just let crypto take over. The banks will fight with everything they fucking have.
What if they print infinite money and short it with infinite money?
It's
I
possible.
mean, there's probably some money in here right now that wants to come out. That's from there. That's like, okay, time to come out. We did a
What
good
if they
job
do
this
something
week.
shady with you?
That would just pump it. You realize the whole thing is a short
listen,
squeeze.
hear me
It
out.
would
Hear
just
me out.
pump it.
No, hear me out. What if the government works out a deal with Tether and they work out a deal with Circle, USDC? Both of those stablecoins get devalued, and they get a very big discount to crush crypto on a short time frame. That would be devastating. Because we already saw how easy the government can manipulate Circle to freeze addresses if they really want to.
It would be to alt in particular, to Bitcoin also, but not that much actually.
No, it would devastate in the value of Tether, dollars, USDC,
Yes.
if
That
the government
would
gets
pump
their
Bitcoin
way.
even more.
No, because we're trading in USDC and USDT. If they can crash those stable coins,
No,
After
people
they've
are
been
too afraid
reported?
about stablecoins. They exited them.
no, just hear me out. They
Everybody in here today took profits into stables, man. I don't care how worried people are. People are using stables.
yeah, stables. That's how they can take the money from people by crashing the stables after people take profits.
I'm
just
not
telling
taking profit in
I'm just
stables.
telling you what's happened before. I'll give you a history lesson. They've done this with dollars. Dollars are constantly worth less and less every single year. And when they want to crush a stock, they will crush that stock. They will let people naked short that stock with stocks that don't exist so the value goes down to zero. Bear Stearns. Look at the SEC report. That stock was shorted by more shares than ever existed. And it would have never went bankrupt if that wasn't the case. But the SEC couldn't save it until afterwards. They let it happen. So I'm just telling you, be careful.
If they want to destroy Bitcoin, there's simpler ways than shorting it. They could just
I know,
ban it.
but you don't want to hold
They could just
stables.
ban it.
So if you really want to be safe from this, if you want to protect yourself, you actually hold the crypto in your wallet. You don't hold the stables. You don't hold it on shitty Robinhood. You actually hold the crypto. If you think Bitcoin's going to go up, you hold Bitcoin. If you think HETS will go up, you hold HETS. You think Doge will survive and go up, you hold Doge. You don't hold the stables during something like this. We saw how
Yeah, and
close-
if you want to short, use inverse perpetual contracts where you don't even touch any stablecoin.
we saw
So beautiful.
We saw how close. No, you don't do that. You're gonna get wrecked too, because if the stables collapse while you're in those contracts, you're gonna get liquidated.
They're not indexed on stablecoins.
It doesn't matter. These stables collapse. It's gonna make Bitcoin and stuff go down in value versus the stables and other pairs. It's gonna be high volatility.
It happened last weekend. We saw Bitcoin rise to 28, 30k on USDC pair.
I'm just telling you
Why
now.
would it
Like,
be
if you really
different?
want to stay safe, you want to have the cryptos. You don't want to have the dollars. You don't want to have the stable coins. We saw how close the USDC came to depegging down to 75 cents. That was very scary. If the government didn't step in, they would have not got that 3 billion, and they would still be depegged now. So, be careful. Don't over leverage. If you're on futures,
And
Like-
Bitcoin would be at 40k in USDC.
let me finish real quick, please. I don't have a lot of time. My $0 liquidation strategy does not work if your stablecoin depegs. If your dollars have already been depegging for over 50 years, they're not really worth the dollar they were before. The same purchasing power. Nixon robbed us when he took away the gold, and that dollar's not backed by gold anymore, and they kept minting more dollars. So your dollars not worth what they used to be before. Your stablecoins like Circle that have a tight relationship with the government may not be worth what they are in coming years, so be careful. If you were to keep your money in a crypto now, like Bitcoin or Doge, or a stable, and not touch it for a few years, I would probably not do the stable, because those stables might not be around in a few years.
I think central banks just took away any motivation that Powell had to pause. I think the 0.25 is almost guaranteed now. And be careful that it's not 0.5 with the backing of central banks. They're going to get this shit under control.
I think 0.5 would be more bullish now because it would show strength in their politic. In the
Well,
Fed.
what it shows is what it gives is faith in the Fed, right? It's the same problem that we had with Volcker. Like, providing faith to the Fed and taking it on the chin and raising rates and sticking to your plan no matter how much heat you're getting gives people confidence that you're serious about getting it under control.
Like if
So
your
we'll see how
dollar,
Powell plays it.
the only way Bitcoin really goes up this high, it's not because your dollar has the same value and Bitcoin goes up to $1 million. No, it's because your dollar lost a lot of spending power and then Bitcoin goes to $1 million. That's why.
It lost 10% compared to last year, and last year Bitcoin was bottoming around these prices too. So
Yeah. But Bitcoin didn't exist 50 years from now. But look how much you could have bought with $1 million 50 years ago versus now.
Pretty bullish news.
Well, this is bullish for like actual cryptos like Bitcoin and Doge and stuff to go up in dollar value. Like this is good for them to go up dollar value. We're still going to march towards that $30,000, and one of us will probably still be able to get a clip of Sato longing Bitcoin at 30,100 right on that big resistance. That's bullish news. But like for your stable coins, definitely stay away from USDC, stay away from Circle as a company, because you may not know this, but if they really want to, they can freeze all the addresses on Circle. And the government can force them to do that if they really wanted to as well. So it's a tough stablecoin to use for trading, especially for futures. You don't pay your taxes, they can come after you on there.